another weekly review. We're looking at the trading week of February 9th, 2026. Second trading week of February was a pretty wild week last week. I know there's a lot of thoughts and a lot of feelings that went into what happened on Friday. So we'll touch on what happened there. It's an interesting day, as well as what to look for, or at least what I'm looking for this week, to kind of simplify things. I think there's some areas we can look at to make some, I don't want to say assumptions, but some bigger ideas form on a week. This week after what happened last week. So I'm going to try and simplify things, at least for my own trading, and just consider that this market is in a huge balance range and has been for quite a long time. And generally speaking, the monthly finally changed from one-time framing up to balance last week. The weekly is in balance, the daily is in balance. Even though previously the monthly was one-time framing up, we essentially still went nowhere. We've gone really nowhere in the last few months, and now it's just kind of official after we took out January's low last week to officially put December's low last week to officially put the market into a state of balance on the monthly. So we'll get into data. We'll start off with this. So 1:30 p.m. we have Waller speaking. On Monday, Tuesday, we have retail sales at 8:30. We have a couple Fed speakers at 12 and 1. Not much on Tuesday. Wednesday, we have NFP at 8:30 a.m. as well as the unemployment rate. We have the 10-year auction at 1 p.m. Thursday, we have jobless claims like we normally do. 10 a.m. existing home sales. And then Friday, we have CPI at 8:30 a.m. From an earnings perspective, we don't have a ton, at least that are broader market moving. So ones I'm paying attention to Tuesday before open, we have Coca-Cola, as well as Fiserv and Spotify. I'll be looking at those. After close, we have Hood and then Ford. Wednesday, we have Shopify in the morning, as well as Kraft and McDonald's. Those will be interesting ones to see. Friday after close, Cisco. And then Thursday after close, we have Coinbase, as well as Rivian. Those are the ones I'm interested in, and everything else I don't really care about this week. I think Moderna might be interesting as well, but as far as market movers, nothing really this week from an earnings perspective that's going to shift the market like we had last week with some of the big tech names reporting. So getting into this week, let's start with last week. So like I said in the opening of this video, we have the weekly put into we have the monthly put into balance, the weekly put into balance, and the daily put into a state of balance. This range is a mess, and it has been a mess for quite a long time. What we need to do from a trading perspective is just manage where and when we want to be initiating initiating larger trades, I'll say. It can get very messy very quickly in a range like this. We saw that a lot last week. So we opened last week right around all-time highs. We had a failure to put in a new all-time high. And then Tuesday, right off rip, basically, we had a strong liquidation, basically taking back the entire move we made on the Globex Sunday Open, as well as Monday. And then we had continuation, a very messy day here, but we had continuation Wednesday, Thursday, and finally put in a liquidation bottom down on Thursday, and a huge short squeeze happened on Friday, taking us back and shifting last week's POC for the entire week up into the 39.30 to 39.40 range. So this wasn't really surprising to me. So Friday's move was not surprising. I know it took a lot of people by surprise. These types of moves, these types of liquidations, especially once we're around huge levels and higher time frames, these can easily trigger pretty big counter moves. I was surprised at how far we actually went. I figured we go into the 39.30, 39.40 range. Is what I figured. We spiked up into 60s, which was kind of crazy to me. Also taking out this daily high, or RTH daily high. That was surprising to me. But this move should not be super surprising after we have a liquidation like this and we recover big higher time frame ranges. This sparked a huge short squeeze. The open of this day was extremely aggressive, had very, very high volume, basically right from this open. This to me signaled there's a very good chance this is going to be a trend day and it's going to be a big short squeeze, and people that are trying to fade this on Friday are probably going to get thrown under the bus pretty quickly. And that's exactly what happened. Same thing happened on the NASDAQ. So what we have now is a massive trading range that we've carved out You want to be careful in the middle of these ranges. I think for Monday going forward, the simplest thing that I can look at is the fact that we spiked up. So we have a nice reference. We have an M period spike up into the close. This range from 69.50 to 69.30, I think is going to tell us a lot. So what buyers want to do immediately is hold this range. We want to hold, really, we want to hold above 69.50s. But I'd basically look at this as, 50 to 30 is early on is going to be where buyers want to hold this market to continue this drive and continue this squeeze higher and force new buyers into the market higher up into last week's high, up into this ETH all-time high, which should be fixed at some point in time. It might not be right away, but consider the fact that our current all-time high in futures was set in extended trading. We should come back to this at some point, as well as fix the bullish imbalance from the monthly range, which basically extends up into 71.50s. That's a lot. That's a lot to ask this market right now. I don't know if that's how it's going to play out, but if it does, it should start from this. So we should have a decent idea of, the first couple of days of this week, potentially this week, generally around this range. So for me, if 69.30s are holding, so if we're holding basically this box here, think of this as just basically a trading range right here. So we'll put this, if we're able to hold this range, then it's going to be only longs for me to attack last week's high. There's zero volume above basically Tuesday's value area high. There's very, very little volume. Backfilling this from a technical perspective should be fairly straightforward if we're starting to get above 69.60s. So I'll be looking for last week's high. I'll be looking for 7,040s to finally get tagged. And then I want to basically stay long until I see some sort of reason to get out somewhere up into this range. And again, we do have this 71.50 range from a larger, higher time frame and balance perspective, which should in theory get filled out. Whether or not that happens, obviously I don't know. But if I'm just looking at this from a profile perspective, this basically should fill out up into 71.50s at some point in time. So the opposite for me is true. If we start offering 69.30s, then it could be a potential sign of early weakness. Could be a potential sign of, this was in fact just a short squeeze. There's not a lot of new organic buyers into the market in this volume. This tape was not very contested on Friday. It wasn't enormously aggressively bought after the open drive, but it was not very offered either, at least on ES. So the volume was around average. People are saying it was a lower volume day. It wasn't really. It was around average volume. And then 69.30s last week's POC as well as Friday's POC, I think will be the teller of whether or not we get technical fills back into 68.80s or whether or not we're able to hold. So if we're basically offering 69.30s, then I think the backfill down into Friday's value area low, down into 68.80s is very likely. Again, not much structure, at least from an immediate standpoint down in here. Again, consider the 50-day moving average on the daily time frame is right here at 69.15s, but I think a move back down into the bottom of Friday's value is likely. This to me, I think, is going to be a short-term list for buyers. So this is a big pivot for me. 69.80s, 69.90s, 69.80s is a big pivot on higher time frames for me. If we're failing 68.80s, basically first sign 69.30s. If this starts to fail, backfilling down into 90s to 80s, I think is very likely. This is going to be the line in the sand, in my opinion, for buyers. If this does not hold up, if we can't find a good bid down here, then liquidating back down to last week's lows, I think, is quite likely. I think this is where you want to really be paying attention if we're trading back into 90s to 80s. If we're failing this, then the likelihood, in my opinion at least, of coming back down into February's current low, into this ETH weekly low, into the imbalance that we still have down into 67.30s is quite high. I really don't want to be looking for longs intraday if we're below this range. So for me, really, it's longs above, longs on hold, longs above, longs on holds of 68.80s, and then shorts if we're failing 68.80s, looking for this liquidation back down and potentially move down all the way to 67.30s. That's how I'm going to look at it. It's hard to give real strong opinions on this market, in a weekly review perspective, because this tape is changing every day. And, I try my best to plan this out for myself and communicate it this week or on a weekly basis in a video. Obviously, what we saw last week was, you have one idea, you go into the market, you have one idea, and then it's almost immediately invalidated, right at the open, basically. So you could be looking at this as as technically as you want. But the reality of the regime that we're in is that this tape is very dynamic and we have to adapt intraday into what we see. The nice thing about last week is that the ranges were so good that you could trade either side of this tape. Obviously, it was a trend down basically from Tuesday, but you could trade either side of this tape pretty effectively overnight and in RTH on some of these days. Capture enough points for your day and just kind of fuck off and you're done, right? So if you're better at trading alongside of a move, if you're better at looking for reversion trades, there were plenty of those last week. If you're a trend trader, if you caught the top of this, or if you're looking at selling highs and you just wrote it right down, plenty of those last week. This is a trader's range. This is a trader's market. So don't be married to a direction. And, don't be holding yourself back if you see, something. If you're looking for a counter trend move at extremes, at ATR, at, 2-3 deviations away from VWAP on the daily, on the weekly, whatever time frame you're using, like there are trades in here in both directions that are viable. And I think we just have to keep an open mind to that. And, from a day trading perspective, I'm going to be looking at, what's the easiest trade I think I can enter and exit with the least amount of risk. That's our job, right? So keep that in mind. NASDAQ is going to be the exact same thing for me. I'm basically going to use the spike base again, 25-170s down into 25-040s. Again, it's going to be basically, I'll do this as here as well. It's going to be basically the same idea here. Tech is still lagging. NASDAQ is still lagging. So that's one thing to consider. NASDAQ looks a lot worse. Looks a lot worse and continues to look worse basically every time this market opens. But again, if we're back into this range and we're holding against basically Friday's POC, I'm not going to be looking, aggressively short, and the odds of this unwinding higher, I think, are still there. So if we're holding 25-170s into 25-040s, again, I'm going to be looking for the long trades back to last week's POC at 25-400s, as well as the settlement, 2025 settlements, this 400 to 450 level, as well as the stacked daily moving averages, the 20-day, the 50-day, as well as last week's value area high, up into 25-600s. I'll just stay long above this range looking for this, and eventually last week's high. Again, same idea here. If we start accepting back above 25-6s, there's not a lot of volume. There's not a lot of reason why we shouldn't come back to last week's high at 26K, in my opinion, in the short term at least. If we're failing 25-040s, again, technical fills back down into this huge pivot, 24-850s. This was extremely important on the tape. This very, very important spot on this market right now, in my opinion. A loss of 24-850s, I think, is a definite sign of immediate weakness, and the odds of coming back down probably into the 200-day, down into the 24K range, are probably pretty high. There's really nothing below this. So this 25-850 level, if you follow me on Twitter, I've been talking about this for quite a few days. If we start failing below 25-850s, there's really nothing to stop us. This was kind of like the last resort down here, this 24-380 area, which I was looking at, which held very, very well on the overnight and on Friday. If we start losing 850s, there's nothing. I think coming back to this weekly low probably pretty fast is on the table, and I think all the way down to the 200-day, which is not far at all, down into 24K range. Again, the bottom of these higher time frame balances will be tested down here. I think it's quite likely. So gonna play around those. Not a huge data packed week as far as big market movers for earnings. We have a couple things, NFP and CPI, so that will create some volatility. But as far as what I'm looking at, I'm gonna try and keep this fairly simple, trying to keep my trades fairly limited, and just really try and play around these bigger spots on this range. And again, keeping an open mind to both directions and the viability of both directions on these trades. So a lot of people are very bearish going into this week after that huge bounce and huge short squeeze that we had. Potentially the funniest possible outcome is we make new all-time highs before we sell. So I'm keeping that in mind. I don't really hold a bias in dead center of balance. I think just trying to frame this around easily identifiable pivots that we have, and playing those short-term trades inside of this range, because that's primarily what I am. I am a day trader. I am a short-term trader. I'm not trying to predict huge swings in this market. That's what I'm going to look for. So hopefully this helps. If it does, like the video, subscribe to the channel if you haven't. If you have any questions, put them in the comments below. I appreciate your time. Thank you very much.